Good afternoon, everyone. Gabe Velazquez here with you, transparenttradesolutions.com for a Tuesday. Today is the 10th of October. Hope everybody's having a pretty good trading couple of days here, starting the week. So we all know what happened over the weekend. We had a gap lower, but again, oil gapped higher, all the safety trades gap lower, we had a bond gap up and so on and so forth. The bottom line, obviously tragic events there and all that, but the fact that oil has not moved other than that gap higher on Friday, on Sunday night, because of the fact that as long as that conflict stays within, those boundaries there, Gaza and Israel, the wild card obviously is Iran. And so, and you can clearly see oil market kind of just going sideways. What that really served to do also, you're kind of wondering why the stock market rallied. The safety trade bonds finally caught a bid and rates are coming down. So as you know, rates have been driving the whole thing here. So let's get right into the charts. Again, give me a thumbs up, put some commentary in the section there. Also, I do have a class coming up on Thursday in a couple of days. Still time to sign up. There's a link below. Very important topic. One of the things that everybody kind of assumes that links are the correlations stay static, but there are, especially right now, there are ongoing correlations that are changing. So if you want to find out, correlations come and go. There are some very kind of strong correlations that never change hardly, but then there are periods, especially now, where some corollaries are stronger and then they fall off and so forth. So if you want to learn what's happening on that front, go ahead and sign up for the classes. That would be 4 o'clock Pacific. So there's a link below. It is a free class. So look forward to seeing you there. Okay, let's go ahead and get into the charts real quick here. I'm going to share my screen and we'll get right into it. So starting with the S&P, we had a nice pop today. Looked like it was going to break out. And as I've been writing, if you don't have the newsletter, also sign up for the newsletter. You can go on the website. You'll get a prompt for the newsletter as well. Overall, I think the market's still kind of tentative, still largely in a range. I would just call this massive range trading. The bears have gotten hit, every time you've shorted these bottoms here, or even some of these lower levels here, you've gotten whacked. You got to wait for price extension and be selling. I am of the notion that, you buy low, you sell high, regardless of what's, you buy low here and you sell high up here somewhere. There's some levels coming up here. That is really what's been working more or less for the last, 6-7 months. And you're going to say, well, Gabe, even here, you see, we went sideways, and even earlier this year, we went sideways for about a month. We went sideways, and then you got that big rally, pullbacks here, even shorts here worked, and so on and so forth. So I am not of that, dogmatic notion of, it's a bear market or it's a, uptrend, downtrend, all that nonsense, whatever. I mean, bigger trends are the only thing that really matters. And the longer term trends for the stock market are always up. But in the short term, if you're going to trade, you got to take advantage of some of these moves. There was a great buy here on the long side. And now, now we're coming up into some shorts. I mean, we've taken some shorts in the NASDAQ along the way, you can see. So I think, that's the other thing. I think people get tripped up with this trading stuff, is they get too dogmatic about all this kind of stuff. And at the end of the day, it's all about making money, buying low and selling high. That is my, that's been my strategy. And I will, again, if you have a disciplined strategy, and if you're wavering at every market move, that is not discipline. That is not process. So, that's another thing I'll be talking about this Thursday. So if you're kind of in that camp and struggling, there's a, if you're going to survive this business, you got to change. Okay. All right. Anyway, so look, we've got some levels up top here. Obviously, these are really good looking supply zones up here. We actually were trying to get short the NASDAQ today, came up a little bit shy, all this level right up here. We were trying to get long somewhere down here and never came down. Russell also had a really nice day off of that level right there we've been talking about. Now coming up into these areas right up here, these are shorting levels right around 1865 and so forth. So generally speaking, I don't think we're out of the woods yet. I don't think this is just going to be a raging, bull market into the end of the year. I think there clearly, obviously, there's still a bunch of cross currents, geopolitical added to that mix as well. There's the Dow, also the Dow kind of rallying up into some really good shorting levels here. So that's kind of pretty much it. I think, now that we have a really nice rally, we've got CPI and PPI coming up here. We got earnings. So there's still all kind of stuff. That's where the opportunities, I think, other than the averages, you got to pick your spots, but there's some really great opportunities on the earnings coming up. We got JPM on Friday open, and then we have Delta. Also, we're looking at this morning we had PepsiCo and so on and so forth. So there's and then really the calendar fills up next week. So that's really where we're going to be really active on that. If you want to learn some of that as well, that's a more or less options type of situations there as well. And I've done some classes on that as well. So now again on the 10-year, I've been talking about possible peaking in rates. I've mentioned this level here. And again, perhaps the CPI or the PPI coming up. If we get a softer number, maybe that brings rates even further. We've been using utilities almost as a proxy for utilities. I think I mentioned Nextera. That actually had a really nice day today for us. Let me actually bring that in just real quick here. So we're long Nextera in the energy, in the utility sector. We bought it here, bought it right 40. We got lucky, and again we bought it right on the lows there. Bought some calls on that, and today we had a really nice day on this. We'll see if that carries, but this is I'm using this as almost like a bond proxy here with what's happening with interest rates. So if rates continue falling, and also, by the way, utilities act as a defensive type of situation. So utilities will rally if things get a little bit dicey in the Middle East and all that stuff. So, okay. And overall, the 30-year is on the cusp of breaking out. 10-year also it's got to break above 108.16. Dollar kind of drifting lower as well. I think we still have to get below this 105.25 level on the dollar. Maybe that happens this week if again we get some softer inflation data on Thursday. CPI I think is going to be tomorrow's PPI, Thursday CPI. That's going to be important. On the currencies, not a lot really to talk about. It looks like New Zealand wants to break out. Euro not doing a whole lot. The yen's kind of just sitting here. So overall, the only two currencies that I'm looking at primarily are the peso still. You can see the Mexican peso getting some nice movement. And then Canadian dollar also starting to get some movement. So these are the two currencies that I've been largely focused on. Metals, interestingly, didn't do a whole lot today. You can see silver consolidating, ready for a breakout. Gold, similarly. I think gold is, again, going to be, it's almost like oil, right? Gold, I think, is waiting for another shoe to drop on the Hamas-Israel thing as well. I think, that... and also the dollar, obviously. So the dollar, interestingly, has not had that safe haven type of rally that typically happens after some crises and so forth. So we'll see how that goes. And then oil, you can clearly see, is just basically going sideways here. again, I think coiling up in anticipation of what really transpires. And again, if it spills over to Iraq, that's the key situation there with oil. For now, it's, again, it's holding the gap for Sunday, but notice it hasn't had any further movement. So I think that's really what oil is about. So this could be set up for a nice breakout type of trade. Maybe you can use USO options and so forth. And then that gas, we've been talking about a breakout. It's also consolidating. We'll see it's sitting right at a level, consolidating right against this level here on the nat gas. It's actually this this level here on nat gas. This level around 3.5 MBTU, right along that area here. Consolidate. And we'll see if Thursday's inventory. Last Thursday's inventory is actually what kicked off this rally, breaking us out of the $3 resistance. And a lot of people are kind of attributing what's happening to the situation in Israel, but it's more European. There's fears about European nat gas now, like there were 2 years ago after the Ukraine Russia incursion. So we'll see. And then we have a grain report coming out on Thursday. For now, not a lot going on in the grain markets. Wheat's kind of pulling back off of that area right there, and then corn kind of just looks like it wants to break out. It's been very, very quiet for now, going on 3 months now. You can see it's been in a range between 480, very narrow range, which is really interesting. Haven't seen this in a long time, where the grain, this particular grain market just has really had nothing. So maybe a Thursday grain report may be changing that. Lastly, on the VIX, you can see I did a class about a month, 2 months ago, I can't even remember, about the VIX hitting 20. So it looks like we may be in a new regime here for now. Could be in a low volatility situation. 15, let's call it 13 to 20. You can see that. Even 15 is going to be critical here. I think 15 may be. You can see we came up to 15 here. Maybe go to 15, and then we get another drop in the stock market and takes us back above there. If things really get dicey, we actually may get up to the 30, but things have to get really bad for the VIX to get up around here, and obviously we'd have a very sharp sell-off if that were to happen. So in any event, that does it for me today. Again, if you want to join me for the class, sign up below. If you want to sign up for the newsletter and so forth. If not, have a great rest of your week. I'll see you on Friday. Take care.